What is going on, everybody? Got Cody here. And what I wanted to do with you in this video is do a quick trade recap over a swing trade in oil that we recently did. And by we, I mean the members that are deciding to do the 3-month live trading with me that occurs every Monday, Wednesday, and Friday. We just started, we just finished 1 week, and then it ends about mid-January, about that time frame. But anyways, so in that room, we're day trading, prop firms, and all that type of stuff. And then I also did open a small personal account. It's only about 3 grand. Opened a small personal account to where we swing trade options, or sorry, swing trade futures, but we actually hedge them with options instead of like having a stop market order out there. But that's a whole other discussion. If you don't know how to use options as a stop loss instead, let me know in the comment section and maybe I'll make a video on it. But if everyone knows, then there's no reason for me to make a video on it. And so yes, let's do a quick recap on oil, and we really slice and dice this thing. We got into position, out of position, re-added, scaled out, added again, and back and forth. And I'm going to show you all the stuff here, exactly on how that trade planned out. But like I said, it was about a $3,000 account, and this grew the account a little over 10%. And so turned out pretty well, pretty solid trade. And if I click here, you can see, and this was done in the micros, obviously because it's only a $3,000 account. But you could simply see where if I go here, you see where we're getting long and then we're hedging it with the put, or we close the put for a small loss, but here's a profit, add it again, close the put, added some more, close the put, that type of thing. And I'll show you exactly what it means. But here are the transactions here, and ultimately a little over 10%. It's a $3,000 account and made 340 on it so far. All right, so let's go ahead over here and show where we got long, and I'll just show you the alerts. So scroll on up, and if you join the room, this is what it looks like. So it'll kind of be like this, and then over here you'll see my screen, and then right here is the alert section, and right here people talk and things like that. So if we crunch this here just so you can see the alerts, and let's go all the way to where the alert was put on. There it is. We'll just put it at the top. All right, so you can see right here, we got the micro oil futures contracts. We got long at 57.03, no stop order. We're managing our risk with the 56 strike put. No matter what happens, we can't lose past 56. And then ultimately the setup was we're looking for weekly support to hold and catch the bounce up, and it is up a lot today actually. If we look at it right now, like we got long down here where it's at 57.03 and bam, all the way up here. In hindsight, I'm like, man, I wish I would have held on. However, for me, when I'm trading a small account, I like to trade like mainly the hourly 2 hourly chart, or 2 hour chart, 2 hourly. But when you catch that move, get out and then reallocate the money to another trade, because like having one micro sure would have gone up a lot in this case, but this is an outlying case. It doesn't always move this far. It'd been like an extra $200 or so. So to me, I'm like, I'd rather make another quick $300 on another trade instead of just letting this one runner that may or may not go to this extreme. I mean, it's up 6%. That's not a normal move. I base my trades on probabilities of what is going to be repeatable, and 6% moves overnight like this aren't that common. So anyways, that's why no look up. But we'll talk about the targets and exactly what we did, because I did show you how we started off with 3 contracts. We hit a target and only had 1 or 2. Had a chance to re-enter, then we went back to 3, hit another profit target, went back down to 2, had a chance to enter again, then we had 3 targets, and then we hit all 3 of our profit targets. But to really show the reason for getting into position, as we'll look here on the daily time frame, is price was coming down to this weekly support, and price was also starting to look like buyers are stepping up at the zone. And then we got long right here on the 20th, right, is what I believe it said. Yes, it was the 20th. Okay, 21st, so 20th right here. So you see buyers stepping up. We got long right here at 57 as price is holding, and here is a reversal candle. This is basically your shooting star doji type of candle, and we're up above it. I was like, cool, let's get long, step at the low. The next day kind of bounced around, and this volatility right here is what allowed us to get into position in and out, in and out. Then ultimately caught the ride up, and we got out at 58.80. So the reason for getting into position is because we're on weekly support, printing a reversal signal, looking for price to go higher. Now, from that point of view, right, like I just showed y'all this right here, where we're getting long and our targets there. And then I still got long. All right, and so while we were overnight, one of our profit targets were hit. So let's go over here and let's go to the 20th. Maybe I should go to this chart. Let's see, what exact time did we go long? 1:38 p.m. So about right here. All right, so we're getting long at this spot right here. We're buying those puts as a hedge. And so no matter what, if the oil would have tanked, our stop would have been filled at 56 with those puts no matter what. So with that being said, so we got long up here. And then our first target, as you can see, we got long at 57.03. And then long at 57.03. Our first target is 57.40. Right here, our swing working out so far. Our 57.40 was hit overnight, so while we're sleeping, we're locking in profits. And still has some going on. And so the new targets are 57.60, 58.20, 58.70. Ultimately, was looking for the 2-hour squeeze to play out. So what exactly that 2-hour squeeze look like? Come over here. Boom, right here on the 20th. So if the weekly time frame was holding, or the support was holding, then I'm looking for this right here, this squeeze momentum to start going this way, which it did, right? It's going to compress, 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 and then boom, we're starting to get the move. So that was the situation that I was looking to see unfold getting along from here. Now, as far as adding and everything, so we got long here on that's the 17th. Go over here to the 20th. We got long right here. The next day, right while we're asleep, price pushed up and filled the order at 57.40. Boom. Market opened and it fell. Right? Market fell. And at that moment, when price came back and reclaimed VWAP, so I was long 3, hit my profit target overnight. So now I have 2. At the open, oil fell back again down to support and rallied. And when it reclaimed VWAP, which is that green line, I added back on another third position or another 1 position. So that put me back at 3. So now that I'm back at 3, see right here, adding my MCL swing at 57.23, bring back to 3 contracts due to point of control holding and breaking above VWAP. And there are my targets again. And then you see the second target was hit, and we added from adding the position, the second target was hit at 57.60. Closed the 1 put that was managing that position. That left me with 2 long again, right? So if we look at that as far as like what happened is, okay, so price fell down. We only had 2, came back up a bit VWAP. We added, now we have 3. And then on this spike right here, bam, now we're back down to 2. All right, cool, target was hit. Then price came back down. And then I was watching price here as we're oscillating on point of control, which is this dotted red line you see kind of right there. And then this green line is VWAP. That level held. And when that held, I was like, all right, well, let's add to the position again. Adding to CL or to oil again. Adding another at 57.23 again, and then adding the put for managing the risk. And then ultimately, what ended up happening is we're holding on, and then overnight, the targets of 58, 58, 58.20, and 58.80 were hit. And so as price moved up, you can see, because on this particular day was oil inventories, and so price moved up, hit our target at 58, moved up again overnight, hit 57, or sorry, 58.20, and then 58.80 right here was the final target. And you see we hit there for a while and then ultimately spiked up at the end of the day. So that is the trade really. Started off with 3, took profits, had an opportunity to enter again, ended up with 3, hit a target, went back to 2, had another opportunity to add again, hit 3. At that time, we had all our targets 2 overnight, and then later on in the day of the next day, hit the last one. And like I said, we're using options to hedge these positions. That way, we don't have to. I mean, we could be one tweet away and everything could just fall apart. I feel better having those options out there, and it is the cost of doing business, right? To have that kind of insurance. And what I mean by that is because if we look here, like the first trade, I made 200 and well, let's see, that one closed at 58, 57.20, 58.20. All right, cool. So we'll go like here. So this went from 57 to 58, but the cost of doing business there is I had to lose $70. But that's better than hitting a stop and with serious slippage, in my opinion. And then, so this one made $97, but I had to lose $22 based off those puts. And then right here, I made $147, but I also had to lose $22 again, just for the cost of insurance. Because if you think about it, if some crazy tweet comes out or unexpected news comes out, the market could flush down, and you're not going to get filled at that stop level. Slippage is going to happen, especially if the market's thin. So I'd rather have a put out there holding my stop loss in control instead of having a instead of like worrying about it with slippage, and then I can sleep better at night too, knowing that that's happening. But like I said, ultimately a little bit over 10% of that small account. If you guys and gals are interested in joining me, there will be a link tree in the description box of this video. If you click it, it'll bring up this little bad boy right here. And what I want you to know is, okay, if you want to trade live with me for the next 3 months heading into January, you click that link right there and join me and come day trade futures with me, swing trade futures. We've been doing a little bit of 0DTE as well, because sometimes the market's going sideways and you can trade sideways instead of looking for a directional play on the futures. If you're curious about the live trading, or not live trading, but how I took a small amount of cash and turned it $187,000 from trading prop firms, you can click here and just check out the webinar to see if it's something you're interested in, if the way I trade really jives with you or the setups make sense. And if you're like, hey, I don't know, I do also have a free funded trader course here where I cover a lot of things that aren't really talked about in the prop firm space, but I have been a prop firm trader since 2016. I kind of know a thing or two about how they work. But this is a free course. If that's something you're interested in, just click it, sign up, and get it for free. If you're interested in my last class I did, click here, watch the webinar, see if it jives with you. And if you want to trade live with me, there is this bad boy here. So like I said, I'm looking to still swing trade futures. I've been enjoying it because sometimes when the day trades aren't playing out, it's nice and you still feel like you got to do something. It's nice to have a swing trade out there working. But all of y'all have a fantastic day and week, and I will see you on the next video. Take care.